Hello and welcome to the Money Magpie webinar, which asks the question, gold or Bitcoin, which is the best investment for these times? And that's the important bit, for these times. As the markets are in turmoil and citizens of the world have less and less faith in fiat currencies, pounds, dollars, euros, etc., governments, banks, and individuals are looking for a replacement to the system that's, let's be honest, doesn't seem to be working very well at the moment. So it looks like gold or Bitcoin or maybe other cryptocurrencies or a mixture of all of these could be the next answer. But there are pros and cons to all of them, of course. For investors, this offers all sorts of opportunities. And we're already seeing gold doing very well. Bitcoin had a little bit of a spike, but it's been in the doldrums for the last couple of months at least. So where are the opportunities and for now and in the distant future? So I've got a panel of experts who are here to answer your questions. Remember, no questions too dumb. Come up with any questions you like. And they're going to give us their insights into what's happening with currencies and money generally right now and find out how we could be profiting from it all. So on the panel, I have first Harry Thorne, who's founder and CEO of BullionClub.co.uk. Say hello, Harry.
Good afternoon, Jasmine, and welcome everyone.
Good
I'm
to
happy
see
to
you.
be here and run through the basics of gold.
Thank you. And BullionClub.co.uk deals primarily in gold sovereigns, but also bullion. Speaking of gold, I've also got John Butler. John, say hello.
Hi, Jasmine.
Hi, John is a former Deutsche Bank and Lehman Brothers director, and he's also the author of The Golden Revolution. We also have Gillian Godsell, who's a crypto journalist. Hello, Gillian.
I'm very pleased to be here again. Thank you.
Great to have you again, Gillian. She primarily writes for Cointelegraph, but various. And last but very much not least, Charlie Morris, who runs the BOLD Fund, BOLD, which invests purely in gold and Bitcoin. Would you believe? Hello, Charlie.
Hello, Jasmine. Nice to be here.
Good, thank you. I also have a mystery guest in the audience that I will be bringing out. Oh, yes, I do. International man of mystery there, so I'll be bringing him out. But importantly, first thing before we start, nothing that is said in this webinar should be taken as financial advice. I have to say that because it's true. This is just a discussion. There'll be a lot of good information, but none of it should be taken as advice. For advice, you need a qualified financial advisor in a one-to-one advice session. So, and I do recommend that you do that, particularly if you have complicated financial affairs, you have a decent amount of cash that you're wondering about. Financial advisor. So you are also, though, welcome to ask any questions you like. No question too dumb, as I said. And just put your questions in the chat, and I will do my best to get them all answered as well as I possibly can. But I thought, hey, it's my webinar. I'll start things off. Why not? And I'm going to start by saying that, as I mentioned before, gold has hit yet another high this week. It seems to be doing that every other week at the moment. So I'm going to start with Harry, my gold man, one of my gold men. Harry, are you seeing a rush of customers coming in to buy sovereigns and physical gold?
Absolutely. It's been a phenomenal start to the year. It's, as I say, been its best week in 5 years last week in terms of growth on the spot price. So
Wow.
it's drawing in. It's not just on us and us as a company. The news is it's on the news constantly about how it's hitting record highs. And as I mentioned, last week was the best week it had in 5 years. And if we go back in time to 5 years, it was the early stages of COVID. And a figure that I find quite interesting is the fact that the first from January 2020 to April to today's date, 2020, it saw a 21% increase to spot price. And if you do the exact same thing in 2025, scarily, it's a 21% increase as well. So
Wow.
it's like history's repeating itself. But as I say, the news itself seems to be pushing gold. We've seen a £2,600 break last week. At the moment, it's sitting around sort of 2,507. So it slightly came down again. But yeah, it's amazing what's happening at the moment. And a lot of analysts expected this to be the sort of forecast for 12 months, and it happened within four. So lots of positive things happening for gold. It's really exciting our end. And as you say, we're run off our feet at the moment. It's been incredible.
Well, good. May you be run off your feet for much longer as well. And John, you've been studying gold for a number of years. So What would you say is behind this extraordinary rise in the price of gold? Is it basically people rushing to the safety of gold as everything else gets rockier or seems to be rockier?
Well, gold is a traditional safe haven, and when you say people, right, we're talking about a huge variety of actors here. We're not merely talking about traditional investors, individual investors, and households. We're talking about official institutions, be they private investment institutions or actual national sovereign wealth funds and central banks. Probably all of the above have been part of what's been happening here. But then, of course, that begs the question of why. Why is gold in such extraordinary demand at the moment? Because actually, if you take a look at various factors that help one model movements in the price of gold up or down, two of the strongest relationships are long-term interest rates and oil prices. And yet, long-term interest rates have actually been rising over the past couple of years rather than falling, which would suggest that gold shouldn't have been rising so much. And oil prices have come down pretty hard recently, also suggesting that gold shouldn't be rising so much. So something else is happening. And what that something, in my opinion, is this. The demand function for gold is shifting. That is, for any given set of macroeconomic variables, economic actors, investors simply want to hold more gold. Once again, that begs the question, why? We've seen these sorts of shifts before in the 1970s. When the dollar gold link was officially broken, there was a shift in the demand function for gold that allowed gold to outperform other financial assets, stocks and bonds for years. Then we saw another such break in the 2000s when we went through two bubble and bust episodes. First, the dot-com bubble and bust, then the housing bubble and bust. Gold was seen as a logical safe haven from both. And so you saw once again a structural shift in the demand function for gold relative to financial assets. I believe we're seeing that again now. Why once more? Because of all the uncertainty around the role of the dollar in the international monetary system, given some of the aggressive policies being pushed on the world by the new administration in the United States. I believe that's having a very profound effect on the demand function for gold today.
John, I'm going to just stick with you for a moment because you and I were talking the other day about, I think it was about 4, 5 years ago when I was talking to you about gold, and you said then that you felt that gold was then really worth about $20,000 an ounce. Not, I mean, that was then. Do you still feel that way?
Well, it depends on how you define worth. The way I came up with that $20,000 an ounce number really had to do with a theoretical argument that that the demand function for gold will shift so dramatically in the coming years because countries will start using it as an actual means of settlement for their accumulated cross-border imbalances, that is, trade deficits and trade surpluses. Now, I know that may sound like a bit of economic jargon gobbledygook to some people, but the bottom line is that if the role of the dollar and other major currencies changes in the international monetary system, and countries are looking for an alternative to settle or at least reduce their accumulated trade imbalances vis-a-vis each other, that would imply a far higher price of gold as that alternative than we have today. And I ran some numbers that I felt were indicative numbers, and that's what got me to that $20,000 an ounce price of gold.
So if you're even close to being right, we've got a long way to go for
Yes,
gold.
yes, that's a key point to make. I think you can actually own a number that big. You can explain a number that big. And so we are perhaps only in the early stages of something, truly historic for gold.
Wow, that's really amazing. So speaking of truly historical, Gillian, let's talk about Bitcoin at the same time, because I would have thought that given what's happening in the world, the upheavals, that people would not only be running to gold, but they would be also running to Bitcoin as another safe haven. What do you see happening at the moment with Bitcoin?
Well, I do see it as a safe haven. And actually, it's funny, just talking about price, I'm reminded of that famous quote that the late John McAfee said. He said if Bitcoin didn't get to, I think it was 500,000, he'd cut off his member on the internet or something like that. God love him, he didn't do it. But we haven't got there yet, so we're being saved. No, it is interesting. Actually, it's funny, and also the geopolitical influence on the crazy stuff we're going through at the moment, the tariffs. But it's funny, I was in Singapore at Token 2049 last year when Trump was in, and we felt it was like a Faustian pact going, oh my God, because people in Web3 tend to be quite progressive, and then there's this very conservative Trump getting, we're going, oh my God, it's really, really strange. But I think what's interesting is that in terms of price, and price is not the be all and be all of everything, but like traders definitely trade on vibe, especially in cryptocurrencies, because it's definitely they trade the news. Is what you do, and Trump coming in and saying, "Oh, I'm big into crypto," definitely gave it a little bump at the time, and it's now sort of evened out a little bit. But traders definitely get that vibe, and also in the US as well, which is positive. The SEC under Gary Gensler was going after everybody. And like we'd wake up every day and say he's going after Coinbase, he's going after XRP, whatever, all these kind of crazy things that didn't actually make any sense, and it was like a witch hunt. And now, of course, Paul Atkins is coming in. He's he's a much more measured approach. And I think what's happening is that it's not before Bitcoin and cryptocurrency we're seeing, or Bitcoin in particular, we're seeing as like, let's save the world. And there is a lot of that in it too as well. It's a lot of endearing, philanthropic and philosophical thoughts behind Bitcoin's creation. But I think with the presence, and I see people are putting the comments there too, the ETFs, it's less let's save the world, it's now let's do business. And I think finally Bitcoin, I'm not ashamed to mention when I go out with my friends who have no cryptocurrency, say I work in this space. It's like before I go, oh no, you're in the funny money. I'm going, well, no, let's talk Bretton Woods, let's talk about other things. So yeah, I think there's a maturity. And so I think people are even like friends of mine who've actually started buying Bitcoin now. I'm like, oh my God, that's amazing. So there is a maturity there. Let's do business.
Oh, interesting. And Charlie, you straddle both gold and Bitcoin with your BOLD fund. And I know that you invest it's about two-thirds, roughly speaking, in gold, one-third in Bitcoin, I believe, depending on the markets. Are you investing extra in gold at the moment, given the stratospheric rise?
Hi, Jasmine.
Hello.
I don't actually run BOLD. I design BOLD. BOLD runs itself.
Oh,
So it's a very simple bit of financial maths, dead simple. It's actually 3 to 1, 3 parts gold to 1 part Bitcoin is the approximate split at the moment. It's never been much higher than that, and the reason for that is because we use volatility to calculate the weight. And so we look at last year's volatility for both assets, and we're trying to understand how Bitcoin is sort of growing up over the years. So it used to have volatility of 100%, which is an awful lot, implying a sort of typical daily move of 6%. And nowadays it's about 40%, which is less volatile than some of the big tech stocks, less volatile than Nvidia and Tesla and that sort of thing. And so again, implying about 3% daily moves. And gold's about 15. So basically we do a tiny bit of financial maths, which is on our website, very, very simple. And you flip it over. And the bottom line is that if Bitcoin's volatility ever came down to the same level of gold, then it would be a 50-50 partnership.
wow.
But whilst they're different, the riskier asset gets the higher weight. But the beauty of the pairing, and this is the most important thing, is that they're naturally uncorrelated. I mean, you'll see this week we've had a very strong gold price on Monday, waking up to Trump insulting the chairman of the Fed and calling him Mr. Too Late. And then, as soon as gold starts coming down on Tuesday, Bitcoin surges. And we just keep seeing this, whether it's months by weeks or years. This year, gold's been very strong. Bitcoin's actually been weak until this week. And so just by flipping them over and understanding that when one does very well, you trim it a bit and add to the other and keep doing that, then that's a very powerful strategy. And that's not true with gold and silver. That's not true with Bitcoin and Ethereum. That's not true with British equities and French equities, but it's true with Bitcoin and gold. It's supposed to be true with bonds and equities, but as sure as John could allude, not anymore. think so.
No, absolutely. Yes, bonds very interesting. That's a whole webinar on its own, I think, bonds and gilts, definitely. So we've got some activity on the chat. Great to see you all asking questions. Andrew Bevan, hello Andrew, lovely to have you on again. Good point that you've got gold, silver, and Bitcoin and others, and you're just wondering what everybody else has got. Well, it would take us probably the whole hour to go through all of that, but obviously now everybody on the panel, I'm guessing that you have a bit of both. Harry, do you have any Bitcoin?
No, I'll be honest, and I spoke to you about this before.
Yeah.
So when I was about 21, 22, maybe slightly older than that, I got a small part of inheritance and I put it in like an unknown coin. I think it was Shiba something. And everyone was saying it was going to the moon on Twitter, and I followed it by length and I lost all my money. And ever since that day, I've pretty much turned my back on Bitcoin and
Yes.
never really had a hold on it and understood it that much. But
Oh,
that's probably why my strength is gold, because it's
yes.
simple to understand. So yeah, that's
With
my only
what you
sort of
know.
dabble I've had myself when it comes to crypto.
Yeah, well, it's a very good point. I mean, Gillian, I'm guessing obviously you've got all sorts, but your advice, I'm guessing, would be only invest in what you know and just spread it around. Would it be?
Yeah, I mean it is an interesting space. I'm not a trader. I'm a journalist, right? So I'm
Yeah.
not, again, not financial advice. There are pro traders out there who do trade cryptocurrency, and it's very, very exciting because of the volatility. So it's
Yes.
an easy market if you're good and you have all your stop loss things, all the things that I know nothing about and don't want to know about. It's easier to make money than it would be on the regular stock market. But then I think a lot of people, and like perhaps what you did, Harry, they kind of invest as opposed to trade, and they like something. So that actually, I know some Shiba Inu whales. It's a shame that you got out at the wrong time, Harry, because you could be a billionaire at this stage. But I think there's an investing thing as opposed to a trading thing. And but if you are going to trade, it's like going to the casino. You must know what your limit is and what you're prepared to gamble, because it is kind of a gamble. But I think it's interesting that people do like to invest. And I know you were going to ask me later. I'll jump in now. The dollar cost averaging, which is a policy whereby you buy a little bit of your chosen cryptocurrency or whatever it is every month, and you don't deviate from it. And I know that that's quite a powerful thing to do. And actually, my sister, who has no interest whatsoever, has started doing just 50 euros a month. And she said, "Oh yeah, I'll see at the end of the year." I said, "No, no, give it 4 years. Give it four
Yes.
years. Just do it that, and then see in 4 years and see what happens." And I think that's quite a nice way to look at it, because if you feel culturally attached to cryptocurrencies, you're interested in it, do a small amount and just do it every month, no matter the price. Don't try unless you're a trader, don't try and follow the price, because I do believe the trajectory of Bitcoin in particular, it's like this, only it's like that. So
Yeah.
don't look at don't look at all the wiggly bits. And then I do believe, and obviously the question of belief, that it will increase over time. So you're over a 4 year period, you're likely to make some money out of it. So that's not financial advice at all.
No,
But
it's
dollar
just what you feel.
it's just a
Yes.
feeling. And I think it's nice if people want to get involved for that cultural thing as well, but not put their, don't, Harry, don't put your investment in there, your whole inheritance in there. Please, no, don't do that. That's too scary.
Yes, I think generally, I don't know about others, John, I know you're a gold man, but when it comes to both gold and Bitcoin, it's quite often a question of percentage of the amount of money that you have. I mean, with Bitcoin, my feeling is sort of, or crypto, less than 5% of your holdings, and maybe gold up to 10% or possibly more. What are your feelings about percentages?
Well, I've done a lot of work on blending gold into a traditional portfolio of stocks and bonds. I haven't done the same with Bitcoin. Bitcoin doesn't have a long enough history for the sorts of time horizons that I normally advise on. It might someday, but it doesn't quite yet. But if you look at a century of data, and those are the sorts of time frames that I like to look at. That may seem very long term, but if you invest along the lines of someone such as Warren Buffett in a traditional value oriented style, you look through at least a few decades in order to decide what's truly good value and what's not. So if you add gold in and look through the decades, what you find is simply taking that long-term history, a holding of around 10 to 15% gold, blended in with stocks and bonds, moves your portfolio to a so-called more efficient frontier. That is, you're going to generate a higher amount of return for not taking additional risk. And that's a good thing. But that means that you're basically saying that it's just an average over a long period of time. You're not taking a view per se on what the price of gold is going to do vis-a-vis traditional financial assets. And that's where things get interesting, because then if you start looking at gold, that is the price of gold, versus stock market valuations, versus bond market valuations, and start doing some ratio comparisons and things of that sort, and you extrapolate some current trends, such as government debts exploding, inflation being elevated, and this sort of thing, you can easily, in my opinion, make a case that the amount of gold you want to have in a portfolio today is roughly double that 10 to 15% range. That may seem like an aggressive view, but again, there are numbers that would support that. But I couldn't really do the same analysis with Bitcoin. I'd have to use a very short period of data, which is not how I normally approach things.
And John, I'll just stay with you because Pat has asked, how do you start investing in gold? And of course, there's sort of two main ways. You can buy the physical stuff, and I'll ask Harry about that in a moment. But there's also digital gold now, and you've been involved in some digital gold operations, haven't you?
Well, by digital gold, what we mean is that there's physical gold behind it, but you have a claim through a gold custodian to add to your gold, to purchase more gold, or to sell the gold if you want to, which is all done through internet-based transactions. You never need to have any physical contact with your gold at all. And so that sort of infrastructure to invest in gold, physical gold, in that very convenient, at your fingertips way, that exists now, and there are multiple providers of that who are well-established providers who have good custody arrangements, insurance arrangements, and everything else to give their customers confidence that the physical gold is really there and that it's really safe, and that so you don't need that physical custody, as it were, in your own home. To have the confidence and the convenience. So that's one way of going about it, which I think is actually very, very attractive. The costs of doing that are actually very, very low. So that's a simple way to a simple way to get started that I do recommend to a number of people.
Yeah, so I mean, I'm thinking of some of the companies. There's Bullion Vault, bullionvault.com, and that's a good one for buying gold and silver. And as John says, they will hold it for you in Zurich or London, or there's New York, various places you can choose, and you can buy and sell it very easily on the platform. And then there are some gold-backed savings accounts like Tally Money and Glint. And John, you were involved in Gold Money as well, weren't you?
Yes, that's correct. Those companies are all trying to generate the highest possible level of convenience by actually having your physical gold linked in some way to an actual payments account in local currency. So you can keep your savings in physical gold, but when you want to spend it, you can spend it into sterling in one fairly seamless step, rather than having to always jump through multiple hoops in order to do that. So that convenience factor is something that some people find attractive. And if they're interested in learning more, they can go to one or more of the providers you just mentioned.
Yes, and we've got lots on Money Magpie about all sorts of ways that you can buy, sell, use gold, all these various platforms, and there are new ones coming up. But Harry, I'll just go to you for a moment. Let's sing the praises of sovereigns, particularly, but bullion, because there are tax implications with sovereigns, and it's a pretty easy way, let's be honest, to get started in buying gold. So how would you answer Pat's question?
Well, with regards to physical gold, that's our bread and butter. That's all we sell. So when you look at the coins that we can supply, we only work with Royal Mint coins because they're the only coins you can purchase within the UK that are going to get you the capital gains tax exemption. You see a lot of these adverts that pop up on TV and on like the shopping channels and things like that are minted in like the Solomon Islands and things like that. And they look very attractive on the TV. But when it comes to selling them, you do have to pay capital gains tax on them. I had a client myself when he first came on board. He bought a big 5-ounce FIFA World Cup coin with purple gemstones in it. And
Wow.
I paid 25,000 for this. What's it worth? And I had to be the bearer of bad news that it's only worth the spot price. It's only worth the weight in gold. But the fact of the matter is that we look into the coins that are only supplied by the raw mint, because you've got that security that it's a genuine coin. We also deal with graded coins, again, to give some authenticity to the coins, which I can go into later down the line. But we also work within a market within the raw mint coin sector in terms of proof coins. So if you're looking at like a substantial investment, it's about spreading your risk and having it in other areas in terms of having loose Britannias if you want to, so you're correlated to the spot price. But we also look at the collectible side of things, and something that could be a 1 of 1,000 coin that's been minted just in 2006 for, say, the Queen's birthday or something like that. And then we're then tapping into the collector's market to not only see the spot price growth, but to see the collectible factor on top of that. But what that then means is when it comes to selling out the market, you've got a different multitude of angles to sell out instead of just melting it and selling it for its gold weight.
Now, somebody else has said that they've got a gold ETF, which is a good thing in many ways, but there are downsides to gold ETFs, aren't they, Charlie? Can you explain what the potential hazards are with a gold ETF? Things that you need to look
I
at.
can't think of one. I mean, I'm a huge fan of gold ETFs.
Oh, right. Oh, you got, well, in that case.
Yeah. No, it's the reason you'd buy a gold ETF is because you want to use your broking account. So if you've got your money with your stockbroker in your SIP or your ISAs or that sort of thing, where physical isn't welcome, you can't put physical sovereigns into your SIP or ISA in quite the same way you can buy an ETF. And they're very easy to buy and sell. They are subject to capital gains tax, so that I suppose is a disadvantage. But that wouldn't occur in your SIP or ISA anyway. So you would be exempt in that case. And they're basically for the big money. I mean, no one with huge amounts of money, like an institutional investor, goes and buys sovereigns in $100 million chunks. It doesn't really work that way. They're very much for the private investor, saving hundreds and thousands. And the ETF is a hugely scalable. Press a button, buy $1 billion worth of gold, sell it 5 minutes later, no problem.
But isn't there a concern about the actual amount of gold that the ETF is tracking? Because it's essentially a sort of a tracking product, isn't it? And I've heard some dodgy stories about ETFs actually not having the gold that they said they had.
There's massive concern on the internet, but not in real life.
Oh, really? That's good. How do you buy your gold? Is that basically what you do? So the gold in your fund, is it primarily ETFs or exclusively ETFs?
So I've got two hats. I write research for Vitree, and we have portfolios and things. When we're talking about gold, we buy gold, physical gold ETFs, or perhaps gold mining ETFs. Put my BOLD hat on, the product we have in Zurich, which most of your clients here today can't buy for legal reasons. That we buy direct gold, what we call LBMA gold, which is London Good Delivery Gold. So the same gold that the institutional gold ETFs would buy. So that's what we own in gold. So we own real Bitcoin, real gold through the London market.
Now I'm just looking at the questions here as you're speaking, Charlie, because and I'm going to go to Gillian next for this one, and I knew I was going to get this question. Somebody's asked, what's the best crypto to buy apart from Bitcoin? Is it XRP? We could be here for all day, really. Once it's what are your thoughts?
XRP is popular because it's a very solid cryptocurrency with a real use. And what's interesting is that the XRP was in the SEC mauling grass, whatever, for a long time, until when Trump came in and that they dropped that particular case. So XRP has gone up the rails again. So yes, I mean it's a business backed token backed by a strong business. I was going to say, when it comes to investing, when you can have fun stuff, you can invest like in Dogecoin, as in the Doge, not in the Doge, Elon Musk's Department of Government Efficiency, whatever. Now Doge has an unlimited amount of tokens, so it's there's no scarcity like Bitcoin has, but it's kind of fun to invest in it, and it has gone up and down like a yo-yo. And you can do that on get your Coinbase account, put some fiat in there, and do a bit of trading. And I think the biggest thing is looking at the altcoins is to look at the projects behind them. So there's a reason why the top 10 or the top 20, even the top 30 are there, because there's a people behind them and there's companies behind them. And increasingly, back in 2017, when I first joined this space, you had all the ICOs, the initial coin offerings, which were like, oh my God, it was crazy. It was wild, wild west. And I'm sure, and I was advisor to many companies, but they're all startups. So I've got like a billion gazillion tokens worth nothing. A lot of them crashed and burned, and they weren't scams. They just were startups, so whatever. But what is interesting again is that in the last year or so, TGEs have become a thing, token generation events. And so companies are again crowdfunding and raising money through raising their tokens. And so if someone is following a project, that might be an interesting thing to do, to say, oh, I really like this project. It's disrupting healthcare, it's disrupting gambling, whatever the project is. And I think that could be quite interesting for people to have a look. And again, only bet that which only invest or bet whatever. If you're going to invest in a startup, it's highly a lot of startups do fail. But it can be an interesting thing to do if with your spare cash, not with your pension or anything like that.
What about those that are called stable coins? Because I've been wondering about that with the dollar going into free fall, it seems, stable coins are connected largely to the dollar. So what's happening to those? Because in the last couple of years, people have been going, oh, stable coins,
Yeah.
one of those. What do you feel about those at the moment?
I feel quite confident in them. Circle looks after their USDC, and Tether is the USDT. The problem with USDT is that it's basically illegal in Europe because they won't show the books to the European Commission. So if you haven't got transparency in that regard, because it's backed by, it's not just a dollar to dollar. There's also there's a bucket of things behind it, so it's not quite clear. It is the most popular stable coin. I don't see them going anywhere fast. These are private stable coins, of course. People use them because there isn't volatility pretty much. And I know we had when Terra Luna collapsed, their stablecoin collapsed. So that was quite a different story, if you like. That was an algorithmic stablecoin, so it wasn't backed dollar to dollar. But going back to your question, if the dollar is failing, what does that mean? Well, I think increasingly we're going to see stablecoins looking at other ways to peg themselves to, and maybe to the euro could be one option. And there are a couple of those floating around that haven't achieved as much popularity and success as USDC and USDT. But I think that's coming down the track.
That's interesting. I'm not sure that I'd go for anything connected to the euro, if I'm honest. I think it's
Well, I'm in the Eurozone, so I'm biased.
right, yes. Now I've got the interesting question from FD saying, is the price too high to invest? Now you're not saying what you're meaning here, whether it's gold or Bitcoin or what. But I mean, my feeling with both of those is no. But John, we've just spoken about gold being really seriously undervalued. What do you think at the moment? Is it too high to invest, or is there genuinely going to be a lot more growth, do you think, in gold?
Well, first I'll say that, as you mentioned earlier, gold's had a fantastic run, and Harry elaborated on that. It's had a fantastic run so far this year. Nothing goes in a straight line, either up or down. And so, one has to accept the reality with respect to gold or anything else for that matter. So, what I mentioned earlier about, I do believe gold is still undervalued and by an order of magnitude, but I feel I can justify that. I feel I can justify that because basically I make the assumption, which not everyone would make, that there is not going to be a fundamental change in the current government fiscal and monetary policy set anytime soon. That policy set is inflationary. That policy set implies that public sector debts will continue to rise. Also, the banking system in the UK, the Euro area, the US, I still believe has not been properly recapitalized following what happened in 2008, 2009, and so on. And so if you evaluate gold as an alternative to fiat, that is national fiat currency, to government bonds, and other assets that in other conditions might be considered to be safe, I think gold emerges head and shoulders above those. And again, if you combine that with pressure at the international level to eventually find alternatives to the dollar and other currencies for settling cross-border trade imbalances, possibly as a result of Trump's policy set, then I think you can easily justify a far higher gold price. How long that takes, exactly how we get there, I can't possibly know. But the idea that you've missed the boat based on these very significant historical trends that I see, I don't agree with that.
No. Charlie, what about Bitcoin? I mean, are we at the top of Bitcoin yet, or is there a long way to go?
I sincerely hope not, Jasmine. I think both assets have got a long way to go, I would think. I mean, let me clarify my thoughts there. So the world, this is a very simple bit of observation, that the world's got $500 trillion of assets, and that's real estate and debt and stock market and other stuff. About a quarter of it's managed by what we call the wealth management industry. It's about $125 trillion, pension funds and wealth managers and ETFs and all that stuff. And when you think about that 125 trillion, so gold's what, a $25 trillion asset now, and Bitcoin's less than $2 trillion. And if you think about that industry and how much gold they own, the $125 trillion institutional wealth management industry, they're kind of underweight gold. They're probably less than 2% allocated to gold. Yeah. And so most of that gold is sitting outside of that system in sovereign wealth and in jewelry that's out in circulation and private savings. And so the institutional investors really don't own nearly enough gold. And when it comes to Bitcoin, they own practically zero. They haven't even started. Now, if you think that mainstream finance will own lots of gold and Bitcoin in 10 years' time, well, it's very early days. And I can't really understand. I can't really say how that impacts on price. That depends on many things, So we're measuring in dollars. If the dollar halves, and we can immediately double the gold price. If it goes down 3/4, we can quadruple the gold price. So there are those adjustments to think about. But just the basic demand. The wealth management industry is massively behind the curve in this area, and they need to own more alternative assets in a system that the bonds aren't much fun. Property, perfectly good to own property to live in and that sort of thing, but it's not a highly liquid investment like gold and Bitcoin are. It's not so easy to buy and sell. And the stock market, as we're seeing, in parts of the world, it's looking good. In Europe, Japan, emerging markets, it's probably earning lots of value. But the biggest market in the world, 2/3 of global value, is the United States. And it's expensive. It's still expensive by historic standards. And so, all paths lead to Bitcoin and gold. To me, it's pretty simple. And the long-term journey is a positive one. But as John says, the short-term bit, who knows?
So at this point, I'm going to bring in my international man of mystery, my friend Tim Price, who runs Price Value Partners. And they're a boutique wealth management firm and heavily invested in money metals and also miners. Tim, are you there?
I am indeed. Thanks for having me.
Good man. Tim, I just thought I'd bring you in because one thing we haven't talked about yet, and I know you're not a Bitcoin man, you're more, gold and money metals, etc., is gold miners. Because this, basically we're going back to the question, how do you start to invest in gold and Bitcoin, etc., but one thing we haven't really talked about gold miners. So can you explain the thinking, because I know you've invested in quite a lot of gold mining companies and other mining companies. Why is this, and what are the pros and cons of that?
I think the best way to explain it would be just to take a lesson from history. So in 1933, Executive Order 6102 made the private ownership of gold illegal in the United States. So it was basically impossible, or at least theoretically impossible, to hold the stuff. Now that was when the world was on a gold standard of sorts. So it's probably not as relevant now, but the bottom line is that we're living through, as you've already said, freakish times in the sort of global monetary system. And frankly, I think the reason why gold, as you say, I can't really speak for Bitcoin or crypto, but the reasons why gold, to a lesser extent silver, but certainly gold is performing so well, I think that question deserves a bit of scrutiny. And I would argue that the primary reason can be well summed up by, there's a group I know over in Zurich called Edelweiss, and one of their board members probably 15 years ago made the following observation, which I think is very, very pertinent. He said, gold is not even an investment. It is a conscious decision to refrain from investing until the return of an honest monetary system makes a calculation of relative asset prices possible once again. Very long-winded quote, but what he was getting at is we don't live in an honest system. And by all accounts, the shelf life of any monetary system tends to be about 30 years on average. Well, the current one basically started somewhat shambolically in the early 70s with the Nixon gold shock. Since then, no currency has been pegged to anything tangible or with any hard value. As a result, as an indirect result of that, governments throughout the world, including the United States, of course, have basically issued debt upon debt upon debt to an utterly untenable level. So I think it's important that people look at this in sort of in the bigger picture, namely what is happening now is not that gold's value is going up substantially, although it clearly is as expressed in currency terms. What's actually happening is I think we're living through the collapse of the existing monetary system. All fiat currencies, I think, are going to fail unless there's a radical, reset of sorts. So to go back to your original question, the reason we own gold and gold miners is because if governments go after the gold, we can fall back ideally on the ownership of having equity interests instead. But clearly that comes with the risk because the equity market is a different animal to the bullion market, and it comes with risk of fraud and poor corporate performance and speculation on the part, say, of the management teams and so on. But if history were to repeat itself, I've long felt that what we're living through feels very, very similar to the 1970s.
Yeah, very good point. Yes,
in a variety of ways.
Yes,
culturally, economically, highly inflationary, et cetera, et cetera, et cetera.
Yeah.
And I think I'm right, and Charlie or John or Harry may be able to confirm this, but I think in the 1970s, gold went up 22 times. If we get a turn of anything like that, and clearly gold's already been a fantastic performer since the year 2000, but I think we're still, as some of your other panelists have said, in the relatively early stages of this new bull run for gold and also other commodities, but gold is clearly driving the way at the moment. Then if you can locate sensibly priced, well-run businesses whose business is to extract gold and maybe silver as well from the earth, then that's like having a license to print money when the gold price is as high as it is. If they've got all-in sustaining costs of, say, $1,000 an ounce, and the price is $3,000 an ounce, that's $2,000 of gravy, and that margin only gets bigger as the gold price goes up. So we like prospects for miners because we think history is repeating itself. There are clearly risks, but that's the point of having a diversified portfolio.
Well, it's interesting. You should say that, Tim, because Grant here has kind of made a similar point in a way. I'm just trying to read it because it's quite small writing that I can see. And his point is that while the gold price is going up relative to the dollar, if gold, if the gold price is going up relative to the dollar, will that mean that in our GBP in pounds, it actually goes down? We've got a bit of a tricky thing with the currencies here. John, what do you think about the elements of gold versus the two different currencies and how they're acting against each other?
Right. Well, it's frequently the case that when the price of gold is going up, what's really happening is the price of currencies is going down. That is, their real effective purchasing power due to inflation is going down, and so that can be a source of confusion. But in the current instance, gold is far outperforming that for reasons that I've mentioned prior. That is, there's been a shift in the demand function for gold that goes above and beyond any reaction to the current rate of inflation out there. And that reflects the variety of factors that I mentioned earlier. But it can be a source of confusion. Ultimately, I would say this, however, if you look at long-term historical charts, what you'll find is that gold is, in fact, by far the better benchmark to value assets. If you look at the value of homes in gold, if you look at the value of certain types of businesses in gold terms, if you look at the price of a Savile Row suit in gold terms, these actually tend to be more stable and follow more gentle trends. Whereas currencies, oh my God, anything can happen there. You can get these sudden big devaluations out of nowhere, or slow and steady devaluations, nevertheless, through inflation. Nobody can print gold. Nobody can inflate gold. Nobody can devalue gold. So that is ultimately the better benchmark for measuring value or wealth generally.
Yeah, isn't it the case that in Roman times, an ounce of gold would buy you everything you needed, your toga and the whole amount that you'd need to be a proper senator? And it's the same now, that about an ounce of gold will buy you a very nice, as you say, Savile Row suit.
Yes, and there are other examples of that. It's almost uncanny. But then when you think it through, why might that be the case? Gold is a real asset. It is strictly limited in supply. very fine cloth and clothing is limited in supply, and the craftsmanship to turn it into a beautiful Savile Row suit is limited in supply. And so there's a natural relationship there that isn't the case with national currencies and the inflation and devaluations that they can go through that have no natural constraint. It all comes down to fiscal and monetary policy expediency. And as I mentioned a few moments ago, the current policy set suggests to me that we're just going to keep seeing more of the same in the near future and indefinitely.
That's interesting. Kevin has made a good point that he says as gold is on a high, should he sell his gold now and then come and buy some again, buy it again when it goes down? You know, as we're all saying with all of this, it sort of goes up and it goes down and etc. Harry, do you think that would be a good plan for Kevin if he can somehow time the market?
Yeah, I think with gold, the saying that we say in the office is that it makes two steps forward, one step back. And I think every time that it does hit that historic high, it does always then push off slightly. So I think when it does hit a record high, it's definitely worth selling out slightly, seeing the dip, and then buying back in again. It's certainly a strategy that works. And I know I spoke to you over the weekend when I said that a client of mine was trading gold and he made 20,000 over the weekend. Well, we had a conversation on Monday and it was very, very different. He said that I'm down 12K or something overnight. And he said,
Yeah.
I just wish that I sold out on the high and then just bought in the dip, which he's gone again. He's gone and bought in the dip again. But yes, certainly on the high, definitely sell out and then go again.
It's a question of knowing, you know, this is always the problem with trading. You don't know really honestly when the high is until it's happened. And the same with the low. You don't know that you know that's actually the bottom. I mean, this is something you must know about, Charlie, because I mean you have algorithms to sort this out for you, don't you?
You make me sound like a robot. Um, yeah, so we don't make timing decisions. I mean, you're talking about inside the board.
Yes.
So inside bold, at the end of each month, we rebalance the strategy and we're trying to be, basically 3-1, more or less. And if gold has a really strong month, and at the end of the month it's 30% rather than 20, rather than sorry, if gold has a good month and it's 80% exposure rather than 75, and Bitcoin's gone down from 25 to 20, then we rebalance and take it back to the target weight. And by the way, that tends to be quite lucky most of the time, because whenever you've got a significant divergence between the two assets, that's probably something that's going to come back together. And so there's value add in that, but that's very different from saying, I think gold's at a peak. If you're saying I want to have 10% of my portfolio to be in gold, well, when it's 12, bring it back to 10. That's a completely different argument to saying I think gold overbought and I should sell some. The long-term view on gold is positive. I think market timing is much harder than it looks. Huge regret if you get it wrong, because you'll never buy it back at the higher price. And so, think about, I think it's a psychological thing here. Some people think financial markets, whether it's gold or stocks or anything else, or even houses, are a trade where you sort of, you put in 10 and you get out 15 and then you do, so I made 5. But actually it's a lifetime journey. You're constantly invested in houses and gold and shares and things in your pension fund and whatever. And you just got to run with it and just try and, reshape it from time to time according to how things change and evolve. And that's certainly my way. Running away for sort of trying to grab a profit, it's really not no one got rich that way. Buffett never did that. And
buy and hold. It's the buy and hold way. You think
good things, buy and hold good things. I mean, that's what we're trying to do.
Yes, I mean, I'm a buy and hold kind of a gal, but recently, as you say, Harry, when you hear about people making 20 grand, and they tend to tell you about the 20 grand they've made, not the 12 grand that they've lost. It's funny how that happens. You think, oh, that's a good way of making money, and then you realise just how much they've actually lost at the same time. And Andrew Bevan here says he thinks that gold's going to go to 4,500 by the end of the year. So, if you buy and hold and hold for another year and then another year, I mean, John, do you think that that's going to happen, that we're going to go to 4,500 and possibly more?
Well, longer term, yes. I think that's almost certain whether it happens this year or not. Again, nothing goes in a straight line. We could see a lot of short-term profit taking following this extraordinarily positive period for gold, and that wouldn't surprise me at all. I think it is important in one's own mind to always distinguish between investing and trading. They are two different things. They serve two different purposes, and they get conflated a lot. And I think that's problematic. What I said earlier about how I believe it's important to have a core holding of gold to diversify traditional financial assets, stocks and bonds, that core holding concept, it basically corresponds to something like an insurance policy. There are times when both stocks and bonds go down. However, in those periods, historically, gold always outperforms. And so there's the insurance aspect. When you buy a house, you also buy insurance. You don't ask yourself, gee, is the insurance maybe more expensive than I want to pay? Or, gee, the insurance is really good value right now. I'll get a bit more insurance. You don't trade insurance. You simply buy it and hold it as an investment alongside your house. Whereas trading is very different. So once you've established your core holding of gold, whatever you think is appropriate for you, if you want to trade around that based on market conditions, and you think your timing could be good and you're willing to take that risk, be my guest. But please understand, these are two different things we're talking about.
Yeah, definitely. I've got an interesting question from, I think it's Pavel Pyle, saying, and this is one for you, Gillian. Is there such a thing as a gold cryptocurrency? I've never heard of one. Do you think there is, or might there be?
Well, tokenization of real world assets is a big thing. So I've come across different projects that are tokenizing either mining operations or actual gold held in reserve. So yes, there are. I can't, off the top of my head, I can't think of any, but there definitely are. And it's to make them more liquid, because even though I forget which one of your guests here said that gold is easier to buy than or to move around than houses, it's still quite lumpy. You can't shave off a few shavings to go and buy your coffee, whatever. So if you tokenize the real world asset underneath, it makes it easier. It gives you liquidity and access to, you can spend your gold, if you like, easier.
And that's a good point. And and I did mention before Glint and Money, which as John says, they have your money in gold, but you also have a card, a MasterCard or whatever. You can actually go and buy coffee with it. Personally, I wouldn't at the moment because I want to keep it all. Thank you very much. It's all my gold. But you could potentially do that, which is a good one. Now, interesting question here. Sorry.
I think just to answer the question about there are two larger ones. One's Paxos, PAXG is the ticker, a tokenized gold, and Tether also have gold.
Oh, really? Tether has gold. I didn't know that.
There are loads. I mean, there are actually dozens and dozens of them, but only two that have made any progress, which I've just mentioned.
Well, to be honest, it does sound like a good idea. You marry the digital with the solid, and that you would hope would turn into something that we could actually use as a currency. But it seems to be all in the melting pot at the moment. We'll see which one works. Now, I've also got a question, and this is an interesting question, something that I've talked to another company about. About whether buying Bitcoin and cryptocurrencies is a young man's game or a young woman's game. Is it that the older people are into gold and the younger people are into cryptocurrency? Interestingly, I did speak to another company that said that they had somebody in their 80s who wanted to become a Bitcoin millionaire, and he managed it. Wants to get some quick money in. But Gillian, what do you think? I mean, is it possible that we're asking, is somebody in their 70s, would it be reasonable for them to invest in Bitcoin or other cryptocurrencies?
Yeah, I think the main main resistance, if you believe in the asset, right? So two people, it's the actual physical doing of it. So if young people tend to be more au fait with wallets, and they understand that it's self-custodial. So, not your keys, not your coins. So there's that risk. So someone in their 70s or 80s might be a bit worried about doing that. But then there's the ETFs that you can invest in separately. So I actually, it's coming easier. It has to get easier, because the beginning was so hard. When I first came into this industry, I'm going, what are these, these long wallet addresses?
Yeah.
How do I do this? And I'm checking the network and I could lose all this stuff. It's terrifying at the start. It really is. It's not intuitive. But increasingly, I mean, it's 10 whatever years now, so it is becoming much better, and it'll only progress. So if somebody believes in Bitcoin, which there's no reason why they shouldn't, because it's the mathematical certainty of scarcity and all the rest of it, yeah, there are ways to do it that don't involve you necessarily having to get a wallet and going onto Coinbase or Binance and buying your own Bitcoin, because that is quite scary for maybe a non-digital native.
Yes, I understand that. That very good point. Now, going back to gold, Andrew Bevan has said that he's actually got a gold SIP. You moved your pension into a gold SIP, and you've done very nicely. Thank you very much. It's gone up 40%. Nice, well done. Tim Price, International Man of Mystery. I know that you run SIPs as well. I mean, what do you think about a fully gold SIP? Is that something you would go for, or would you say that that's a bit too risky if it's just gold?
I mean, even by our standards, that's somewhat punchy allocation to gold. So no moderation in all things, I think.
Right. And Charlie, you've got gold and Bitcoin in your fund. What do you think about a gold SIP? Would you go for that, or would you want to mix it up into other stuff as well?
So I think the gentleman's suggesting that he's got a SIP that's fully invested in physical gold, which sounds like a great idea. That doesn't mean it has to be all of your SIP, because you can have 2 or 3 different SIPs.
Of course.
You can have, one with Hargreaves or AJ Bell, and one with some exotic manager doing Cayman Island hedge funds or something, and then you can have another one just doing pure gold. So in that guy is absolutely fine. But yeah, I wouldn't have 100% in gold, and nor would I want people to put 100% of their money into my BOLD fund.
Well, good point. So it's nice to know, you can do. That's the great thing about pensions and investments generally. I mean, my number one rule for investing always is spread your bets, and you can either do that in a fund that covers everything, or you can have lots of different funds, or invest some in gold, invest in some Bitcoin, invest in some bonds, in some shares, in some property, or you can do your own diversification, as I call it spreading your bets, but diversification is a good one. We've got another question about XRP, if that's the thing to go for, that it's doing well. Charlie, before we started, you were saying that there are different categories of crypto at the moment. What are the categories that you were, apart from Bitcoin, got? You were saying currency rails and stable coins. What are the categories?
Yeah. So that was referring to how the regulator sees the industry, and they divided it into 3 groups. And one of it's crypto as we know it, Bitcoin and XRP and Ethereum, stuff like that. Then they put it into another group, which is stable coins, which is basically a modern form of money. And stable coins are really, really important, because for the first time in history, you can send dollars across the internet, or pounds or euros, whatever. Now people say, oh, I can do that with my banking app. Well, there's a bank in the middle. This is without a bank. So you can send dollars electronically to the other side of the world with no one stopping you, no interference, and pretty much no fees. So that's a really transformational idea, and stablecoins have grown to a $200 billion industry. And it's just going to get bigger and bigger and bigger. Now, should you buy stablecoins? Well, you're just buying a dollar or a pound, so no, don't bother unless you actually need to use them. But you might look at buying a stablecoin issuer, the business behind it, and that's quite interesting. But that's another conversation. And the third area that the regulator looks at are the payment rails. So what is this innovation behind Bitcoin and crypto generally? Can we use some of that technology to improve the way finance works? For example, when I started in the finance business years ago in fund management, a share would settle T+3. A Japanese share was T+5, meaning you'd buy the shares and have to pay 5 days later. Now the whole thing's gone to T1, and increasingly we're going to T0, meaning instant settlement. And the way you can do that is with stable coins, and the way you can't do that with a traditional banking system. And so there are genuine innovations coming through here. And so it's quite interesting that the regulator split it up into stable coins, this sort of fast electronic non-bank money, the tech, and the crazy crypto stuff. And within crazy crypto, Bitcoin is, well, if you strip out stable coins, it's basically 70% of the space is Bitcoin by value. And then the other 50,000 coins with stupid names, many have stupid names, is a very small part of the space. Of course, most are liquid. But, as Gillian said earlier, the top 10, 20, 30 projects in crypto are very real. And there'll be, I'm sure in 20 years' time there'll be a Nasdaq-like instrument that everyone will own with these sorts of things in it.
Yeah, that's going to be interesting. I'm looking out for one of those. I've just got another really interesting question. We've actually got past the hour thing, but I'll go on for another 5 minutes or so because somebody's asked about the US opening up Fort Knox to see if they actually have got the gold they should have, because there's a rumor that the gold that there's supposed to be in there isn't in there. John, what do you think? Do you think that there will be the gold that they think there is? And if there isn't, what do you think might happen?
Well, I think there's two things to consider here. First of all, there are those who do believe that if they do a full audit, which has not happened for decades, by the way, that if they do a full audit, they may well find that perhaps there's some discrepancy. It just hasn't been done for a very long time.
Yes.
The more subtle risk is this, that the physical gold is all very much there and lines up with the previous audit from a few decades ago, but that maybe, just maybe, there are undisclosed agreements between the US and other countries that the US has effectively lent some of that gold out, or alternatively has pledged it to other countries in exchange for who knows what. Now, how likely is that? All I'll say is this. There is some curious references in some State Department and other US government documentation referring to gold agreements through the decades. Gold agreements, you wonder what they mean. They never offer too many specifics, but what else could it mean? And that leads some people to wonder whether some of that gold is compromised in some way. I don't have a strong opinion on it, but I do understand why some people are concerned about it.
Yeah. Oh, and Harry, what do you think if there isn't quite the gold that's supposed to be there, what do you think that would do to your business and to gold price generally?
Well, I think someone did say it in the questions. I think in the whole time that Trump's in power, I think gold is always going to stay strong because he's always going to see it as favorable, and he's going to do everything in his power to benefit America. And with them being the largest holders within their reserves and second highest is Germany, and 37% of their gold is actually kept in the US. So I think they're going to do anything in their power to keep it strong. And I think even when it comes down to Fort Knox, I've heard people say you've got AI and all this stuff that Trump can manipulate what he puts out in the news and say, brilliant, it's all there. The price is strong. Let's keep going. But I don't know. I think, as I say, with Trump in power, I think he's going to do anything possible to just keep the price flying because it's only going to benefit him.
Yeah, good point. Final question, Gillian. Somebody's just asked, when do we think that crypto will be regulated by in the UK? Now you're in Ireland, I know, but you cover the UK.
The FCA, I think, as Charles pointed out, it is looking at that. There's a couple of problems I know from speaking to Bitcoin lobbyists in the UK. One is that Bitcoin is lumped in with the rest of the cryptocurrencies, which it shouldn't really be because it's a different kettle of fish. Because a lot of the altcoins, some of them are centralized, they're owned by projects, they have different characteristics basically. So that's probably not a good idea. And the other problem is too, I think in the UK, is obviously this market, is that to be a member of the FCA, you have to divest yourself of all your crypto. So that means that people who go in there tend, A, not to have it in the first place, and B, don't care about getting rid of it. So it lends it to be possibly more hostile to cryptocurrency. So I know there is some concern. Having said that, I know of a lot of UK friends who say that because you're not in Europe, and MiCA is an awful stranglehold here, you have opportunities to become the crypto center of the world. So it's a double-edged sword. It depends which way the regulators go, I suspect. But there's an opportunity certainly for the UK to lead the way, because MiCA, I don't think is MiCA's too tight. I think it's too restrictive. So
yeah.
Overall, I think.
Let's hope they take up the baton with this, because it could be a biggie for the UK. Now, finally, Charlie, can you let me know how can anybody get hold? How can they invest in the BOLD Fund? Because up until recently, you could only do it in America, couldn't you? Can you do it in the UK now?
No, Americans can't buy it. It's right. I've got the best fund in the world that's the hardest to buy, unfortunately. So
yes.
It's not a great situation to be in. And it's listed in Switzerland, it's listed in France, the Netherlands, and Germany under the ticker BOLD. But it's restricted in the UK because all crypto ETFs, ETPs, call them what you want, are banned in the UK for retail investors. So you can only buy it if you're an elected professional in the UK, which basically, if you don't know what that means, then it doesn't matter. And so it's hard to buy. But you can go to my website, boldetf.com, and if you go there, you will figure out how to do it yourself. So you can, just keep track of the proportions that you should be doing, and just try and understand the theory of why it's worth rebalancing regularly. Our data suggests that rebalancing your Bitcoin gold and keeping the risk weights adds about 5 to 7% per year to the returns. If you keep on buying, selling high, buying low, and they keep taking in turns to do well, it works. It makes money. There's been 3 or 4 decent rebalances in the last 6 months. Each one adds value.
And then, Harry, how do we get hold of sovereigns through BullionClub? Can you do it online, or do you have to phone up or come into the office? How's it done?
Great question. So with regards to us, we're based out in Surrey, so we're at the bottom of the M25. And we are based in a really lovely manor house. So the reason why we've chosen to go into an office like that is very fitting with like the historic coins. But more down to the fact that we want to be as transparent as possible. And we have clients coming to the office pretty much twice, 2-3 times a week to meet up with us, go through their wants and needs, understand what length of hold they're looking for, what sort of figure they're looking to diversify into gold. We also offer Zoom calls, but I'll be honest, 70% of our business is currently just done through our website, which is www.bullionclub.co.uk. Again, introduction call with one of the team just to run through, as I say, your wants and needs, what you're looking to achieve from gold, putting a package together so we're understanding your length of hold, what sort of coins you're after. If it's something that you're looking at investing a couple of thousand, it may be a certain size. If you're looking at investing $1 million, we get some really rare historic coins that are like 600,000 for one coin. So it's about tailor making the packages, sending those out, and then keeping in regular contact with clients to make sure that they're up to date with the market, understanding the market, and also to be the first port of call when it comes to sell out, because it's all well and good getting involved, but you're going to want to access your funds and your profits in the future.
Oh, that's great. And then finally, John, The Golden Revolution is your book. You've updated it, haven't you? I mean, it's available on Amazon.
Yes, the second edition is called The Golden Revolution Revisited, and that is available on Amazon UK or any other Amazon national site. So yes, very easy and convenient to get your hands on that if you'd like to learn more about my thinking about the future role of gold in the international monetary system, what that might imply for price, and also what that implies for other financial assets. There's a whole section in the book which talks about what the reintroduction of gold to the monetary system, what it would do to bonds, what it would do to share prices, because it would have an impact, in my opinion.
Yeah, definitely. And Gillian, we can see your articles on Cointelegraph and various other crypto outlets.
Could I add one little thought?
Yes, do.
It was Tim said about, he's witnessing the collapse of the financial world. And, it's often said that if World War III happens, we live in very strange times. That means that World War IV will be fought with sticks and stones. So rather than investing, if we're being very pessimistic, don't invest in gold and Bitcoin, invest in tins of food, which you could hoard in your basement.
Yes. I've been saying that. I need to say that I have as well. Thank you.
There is a line from 2008, which is gold is for optimists.
Oh. Well, I like to think of myself as an optimist. So yeah, I'm into gold, but I'm also into Bitcoin. It's been great having you all. Thank you so much to everyone on the panel. And thank you to all of you in the audience. Thank you to Harry Thorne, who's founder and CEO of BullionClub.co.uk. Thank you to John Butler, former Deutsche Bank and Lehman Brothers director and author of The Golden Revolution Revisited, as we've said. Gillian Godsell, crypto journalist with Cointelegraph, and Charlie Morris, who runs the BOLD Fund, which invests purely in gold and Bitcoin. Now, we've recorded this webinar, as you know, so it will be uploaded to the YouTube channel, Jasmine's Money, later today, and we'll send it out in the Money Magpie Invest newsletter. That's a fortnightly newsletter that goes out every other Saturday. So if you're not signed up to that, why not? why not? Do sign up to that. We'll send you a link to sign up to it afterwards. We'll send you actually a few links to various sort of helpful websites and articles afterwards so that you can do a little bit more digging into gold and Bitcoin. If you're watching this on YouTube, remember to like the video, share it, follow us, and comment. We always love comments. And also, we've got another webinar coming up on Thursday, May the 29th. It's going to be about pensions, about what to do with your pension if you're coming up to retirement, particularly. We've got some great people on that panel, including the former pensions minister, Steve Webb. So join us if you're wondering about what to do with your money in your 50s or 60s and thinking, oh, what do I have to do next? So I hope you can join us then. Thank you so much for joining us on this one, and see you next month. Thank you very much.